Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to Halftime Report. Well, it's 12 noon. We're halfway through the trading session. I'm Nigel D'Souza, and with me today is Surbhi Upadhyay. Hey, Surbhi, good to see you and good to have you on the show. Well, the markets are not disappointing today. First half of trade has been fantastic.
It's Friday fever. That's what I'd say. There's a lot of ground to cover, but largely speaking, the picture has been very, very steady. We will quickly bring you up to speed. Well, as we told you, it's been a really great start and a great first half to the session today. We are pretty much close to the high points of the day. Not just that, the Nifty is inching closer to the all-time highs as well. We went up to about 11,480 thereabouts, so just about 10 points shy of that mark. And Nigel, the one good thing, I guess, again today is that you have contribution from a lot of different parts of the market. So banks are firing up, metals are shining again, IT stocks are doing well. In fact, on the Nifty, it's just, I think, 4 or 5 stocks which are down. The rest of the entire juggernaut is moving higher today. That's right, Surbhi. Things looking quite good as we speak. And more importantly, I was looking at the PCR actually. And the PCR went to around 1.7. When the PCR goes to around 1.7, 1.8, that's really the first sign that, in fact, maybe we are getting complacent. People are writing puts and it's getting rather easy. So that's why we did see some profit booking. The 11,500 mark is extremely important because the all-time high is at around 11,495. That's point number one. Point number two is the highest open interest is at around 11,500. And from there, we've seen a bit of a U-turn. So we'll have to keep an eye out on that mark. Currently, we're just 30 points shy of that level. Once we get to that level, let's see whether or not the bulls have enough. But the bears, they have shown conviction and they're saying we are going to look to defend the 11,500 mark. Set for an interesting fight in the second half of today's session. So let's quickly move to our movers and shakers segment. We've got lots of stocks on the radar as always. Let's actually start with a couple of names on the pharma side. We have Ekta joining in with a spotlight on Apollo Hospitals. Ekta?
Well, yes, absolutely. Apollo Hospitals has actually rallied quite significantly on a week-to-date basis. That stock is up around 24%. The results came out on the 10th of August. The company held a conference call on the 11th of August. So the company reacted, or the stock reacted prima facie to its numbers on the 10th itself. But I think it is a lot of what came out from the conference call on Saturday, which is really enthused sentiment. So, for example, Edel Weiss says that the management commentary is overall positive. The company has concluded its capex cycle. Key loss-making ventures have broken even. So, for example, there was a new hospital EBITDA of 11 odd crores versus a loss of 8.7 crores year on year. According to them, the stage is set for Apollo to double its EBITDA and reduce its capex to 1/3 over the next 3 years. And hence, maybe there is more optimism which is coming in on Apollo.
Okay, all right, Ekta, thanks so much for that. But the stock that we've been focusing on is Jet Airways. Early this morning, the management said that they're going to be coming out with a set of numbers in the next 10 days or so. Sonia's with us. Sonia, run us through those details.
Well, yes, finally we know the date of when Jet Airways will come out with its numbers, and that's the reason perhaps there's a bit of a relief rally on the stock. So now on the 27th of August is when they will detail their numbers. Remember, the board had deferred the earnings on the 7th of August, on the 9th of August rather, after the audit committee did not sign on those numbers. They haven't mentioned the reasons why they haven't signed on those numbers. So hopefully we'll get more clarity on the 27th. But the losses are expected to continue. Remember, last quarter, Jet Airways posted a 1,000 crore loss. And Edelweiss expects a 415 crore loss in this quarter as well. Yields are expected to be under pressure because of competition. The revenue per seat kilometer has been on a declining trend. In fact, the RASK in FY18 was down almost about 0.5%. So that pressure could continue. However, the stock has made an attempt to recover, perhaps because now we at least have clarity on when the numbers will come out.
Okay, so that's Jet Airways also on our radar. Thanks, Sonia, for that. Back to Ekta for just one more update on Unichem. That's on the radar because Ekta has got her hands on the Form 483. Good, bad, ugly. What does it mean for the company, Ekta?
Well, you know, the Unichem's API facility, in fact, was inspected by the US FDA in the month of July for 4 days, and they were issued 4 observations. At that point in time, the stock had already reacted to the fact that there were 4 observations on this particular unit. However, now the details of these observations are out, and they look as though they are largely resolvable, according to analysts, that, you know, for example, cleaning procedures are not validated. There is some issues in terms of documentation, etc., like test procedures are not scientifically sound. Now, the only concern with regards to Unichem is that they've already sold off their India business. So the stakes are higher for them to resolve observations particularly faster and well for continuity to go on for their US business without anything to hamper it. So that's probably the only condition. Otherwise, Unichem, anyway, the stock is at a 52-week low. The street seems quite sanguine at this point.
Okay, all right, Ekta, thanks so much for that. Well, Mahindra & Mahindra's Pawan Goenka, he sounds extremely bullish on the commercial vehicle space. He expects the commercial vehicles industry to grow at around 15% in FY19. Here's more from what Pawan Goenka had to tell us in terms of the company's growth outlook.
There is a very good demand pull that's happening. And even before the announcement of axle capacity, the growth has been extremely good for the industry. And I think it's fair to say that on that basis, the industry should see a larger growth than what we had anticipated at the beginning of the year. So 15% will be a reasonable number to say. We have a fairly busy launch season coming up in UV segment and also in commercial vehicle segment. In UV, we have the launch of Marazzo just around the corner, which should happen before the end of September, as we had said earlier. And after that, we have one more UV launch happening before the festive season and one after the festive season. I would say is the three vehicles that we are launching, that is Marazzo, S201 and G4 Exton. Together should give us volume in the range of 8 to 10,000 vehicles per month minimum. And if we get 8 to 10,000 vehicles from these three products, that would mean a growth of about 40% on our annuals or monthly sales that we have had in the last 2, 3, 4 years.
Well, the Bata stock has rallied more than 50% in the last 1 year, with the company also reporting a good set of numbers in the first quarter. Earlier today, we spoke with Mr. Ramkumar Gupta, the Director of Finance and CFO of the company, about the outlook going ahead. Let's listen in to what he had to tell us.
We are taking lot of initiatives for margin improvement, like consolidation of suppliers, bulk contract, long-term agreement with our suppliers, raw material suppliers, as well as other suppliers. We are renegotiating our rentals with the existing landlords, plus we are optimizing our retail space. In our current range, women category provide 28 to 30% revenue. We are expecting that women category will grow substantially in the coming days.
Okay, so that's a management commentary from Bata. Speaking of managements, we also caught up with the top management of Mishra Dhatu. That stock has been buzzing around in trade after posting a good set of first quarter numbers. Sales were up about 20% for Mishra Dhatu. Margins expanded. We caught up with Dinesh Lekhi, CMD of the company, to talk about the margin outlook going forward.
In the first quarter, the cobalt, which was at a peak of 95, has tanked to about $65. So we are going to get advantage in subsequent quarters because the cobalt volatility has gone on to the downside side. The energy generally are competitive sectors where we get average margin. But from the space sectors is a high margin product because they are very, very high quality and high niche products are there. And especially from the titanium, which is our high margins product, is more and more orders from the sector comes. It will be at least maintained at 28% and maybe little 1 or 2% here. The reason is that we could not produce much in first quarter of the titanium, and the more titanium portfolio will increase the margin. We are also making the steel, which is on a low EBITDA margin. So I feel it will be maintained.
Well, here's a quick recap of all the top buzzing stocks we have. We have Jet Airways, pharma stocks like Apollo Hospitals, Unichem Labs, Mahindra & Mahindra, Medani, as well as Bata.
Okay, so those are the stocks on the radar this afternoon. Let's take a look at some important brokerage commentary that we've gotten today. Lots of stocks on the radar. We have Sonal joining in on the likes of Godrej Consumers, Dilip Bilkon, Axis Bank, ICICI Bank. You have your plate full, Sonal.
Yes, I do, and you named them correctly. I'll start with Godrej Consumer first. The stock was buzzing in trade yesterday. Kotak has written on the company, and they have a sell call on the company with a target price of 1100 per share. They say that the company is indicating 24% margin that is sustainable for FY19, and they also think that the distribution expansion and innovation are the two segments that will drive the growth for this particular company. Kotak has also written on the Bilcon after the results that the company reported. They have a buy call with a target price of 1,250 rupees per share. They have increased the estimates for the EPS by 1 to 3% for FY21. However, they have downgraded the order inflow estimates to 12,000 crore rupees. So that stock is in focus today. Kotak Securities has written on Axis Bank. They have downgraded it to a reduce from an add. They think at current levels, they prefer playing the corporate banks like ICICI and State Bank of India. They could see some improvement in the impairment ratios for the bank. So that is why that stock is in focus. Morgan Stanley has written on ICICI Bank. They have an overweight rating with a target price of 460 rupees per share. They assume that the credit cost might go up by 90 basis points and NIMs could improve by 30 basis points to 3.5% by FY20. And they also expect loan growth of 12% in FY19 for this company. Lastly, I'm focusing on NBCC because Nomura has downgraded the stock to a neutral from buy, and they've cut the target price to 82 from 129 per share. They think that long-term outlook remains intact, but they still have cut the EPS estimates by around 34 to 37% for FY19 and FY20. Back to you.
Okay, all right. Thanks so much for that, Sonal. Well, keep an eye out on a few stocks from the frontliners. Axis Bank has moved for the high point of the day. You have SBI as well as looking quite good. So let's pull up the intraday chart. Some of these stocks are moving higher. United Breweries has a good run yesterday, but today, in fact, it's giving back some of what it put on yesterday. So that stock's virtually moved to the low point of the day. So keep an eye out on that one. And Godrej Industries was trading in the green. Now that one as well has moved into the red. But Jet Airways, that should be the stock that you should be looking at. The stock has been buzzing, and in fact, finally, there are some signs. There is a bit of a turnaround plan that the company is looking at. In the first step to turn around the ailing carrier, Jet Airways is looking to sublease some of its smaller aircrafts. Now, the move is part of a larger strategy to cut costs and consolidate operations. Utkarsh joins us with more details. Utkarsh, which airline is in talks with Jet Airways?
This is one of the first steps by Jet Airways to really turn around the business, to implement the cost-cutting measures. What we are picking up from our sources is that Jet Airways is in talks with TrueJet, which is one of the regional carriers, to sublease 7 of its ATR planes for a period of 5 years. What we're also picking up is that the talks are on for a wet lease. Now, what does a wet lease mean? The wet lease means that not only the plane, but the employees, that means the pilots, the crew, as well as all the maintenance and engineering of the planes will be taken care by Jet Airways. Now, this will serve two purposes for Jet Airways. First of all, if you remember, we had spoken about the fact that how 3 to 4 ATRs at this point of time are grounded because they were running on loss-making routes now. So now the company can really make use of those grounded planes and it will get money out of it. In fact, subleases don't give you a lot of money, but at least it will save the cost the company is paying to keep them on ground. Secondly, when it comes to wet leases, you get a lot of money from maintenance and engineering, and also your employees who were fearing for layoffs can get better jobs and get new jobs for the period of 5 years. So this is the first step. As I said, the company is obviously looking to sell the other planes, which are the wide-body planes the company has in the process of turnaround. But we will keep you posted on each and every step which Jet Airways takes, if it for a turnaround process.
Okay, all right. Thanks, Utkarsh, so much for getting us that update on Jet Airways as a stock. That's up 2.5% today. We will, of course, take a break. But before we do that, just a quick update as well. Utkarsh did write to TrueJet as well as Jet Airways on that story. TrueJet has confirmed the CNBC TV 18 news break. They say that they are in talks with Jet for subleasing of aircraft, while Jet Airways has told CNBC TV 18 that they continue to evaluate all possible alternatives to ensure optimum utilization of the airline's fleet. So that's the response from both the companies. On that note, we'll take a quick break. Coming up on the other side, a management conversation. Kaveri Seeds is on the radar. Promise, let's get into a conversation with Kaveri Seeds. That's the stock on our radar. Company came out with numbers. Now, optically, if you look at it, revenue is down 1% for the quarter gone by. EBITDA is down about 2%. Margins have been flattish. Raw material costs are higher. So let's find out really what the next 1 year at least holds for this company. Mr. Vijay Kumar, CFO of Kaveri Seeds, with us on the line. Thank you, sir, for taking this call. as we were just discussing in the break, I think the company is going through an interesting transition because you're trying to bring down the share of the cotton seed business to about 50% or maybe even 40%. What I want to understand is that, are you scaling up the hybrid seeds business? What about margins? What should we expect as this revenue mix change takes place? And how much of it will reflect in FY19 itself?
Yeah, good afternoon, ma'am. We are actually scaling up the cotton business and non-cotton business also. But non-cotton business scaling up will increase, the percentage of growth is more. That is the reason, go down the line, after 4 to 5 years down the line, we want to see that the mix of non-cotton to cotton should become 60-40 instead of 40-60. And now we are releasing a lot of hybrids in cotton, and to meet the south, central and north also, we are releasing a lot of hybrids in vegetable seeds. Next 3 years, 50 more hybrids we are releasing. We are going to release some more hybrids in paddy, maize and all.
Yeah.
With that, we want to increase the business.
All right. Mr. Vijay Kumar, if you could give us a sense, hybrid business, I think, if I'm just looking at the past quarter, now you're doing, you've done around 45 crores approximately in the first quarter. So what do you see it scaling up to? And give us a sense in terms of margins, right? Currently, you're focusing more on cottons. You're saying that you're going to focus on non-cottons. So what's the margin difference? It'll be margin accretive, I'm guessing.
Non-cotton to cotton. Non-cotton products margins are 5 to 7% better. And vegetable seeds margins are another 15% better than cotton seeds.
Oh, okay.
So going forward, the margins will increase. And 1920 onwards, at least for 5 years, we can ensure that top line will be grow 10 to 15% and bottom line will grow 15% plus.
That's something you've told us earlier as well, I mean, in terms of the guidance. Now, help us understand this, sir. This is a big shift that the company will go over because you're really scaling up on the high-margin businesses. This year, what should we expect? What is the blended margin rate that you will do in FY19 compared to FY18 as you start this transition process?
The current year, the revenues will be 5 to 10% compared to last year, and the margins will be 10% better than last year. Current year is only transition period, and next year onwards, the real growth will start. Because we are getting a lot of approvals from the for the export business for various countries, and also we are releasing a lot of hybrids this year and next year for vegetable seeds.
Okay.
And cotton also for north, as on date we are zero. We are releasing new products which suits to the north states next year.
So just clarifying, you said margins are going to be 10% better FY19 over FY18?
Yes, 10% better.
Okay.
Okay, all right. You were mentioning something about exports as well, Mr. Vijay Kumar. Exports as a percentage of revenues, how much is it?
Today is below 2%.
Below how much?
And below 2%.
Below 2%. And you're seeing that growing up?
That will grow up. We
to
are
how much?
Now doing that will grow up down the line 5 years. It will reach up to 8 to 10%.
8 to 10%. Okay, that's a smaller segment. But I wanted to focus on your working capital days, sir. It appears your creditor days have come down quite drastically. What are the working capital days? What was it as well? And where is it headed? If you could give us a sense, because I've got some rough estimates that suggest that working capital days have gone up to around 75 days. Is that correct?
No, that is our average receivables period is only 36 days.
Right.
Because of seasonality, it looks like very varied. But if you take the average of the whole year, it's 36 days or below 36 days, our receivables.
So we're talking about the working capital cycle. That's taking into account your debtors, your creditors, your inventory days as well. What is that number?
Actually, in fact, if you see to the per se seed company, we cannot apply this formula because 70% to 75% business will come from first quarter.
Okay, all right.
That is the issue.
Take that point.
So there have been some reports that you perhaps could look at some strategic deals, maybe a stake sale to investors. The name of UPL has come out in one of these reports. Can you just give us some clarity on this?
So one thing is note to the market. A month back, our top management is clarified to the market that we are sitting on 500 crores plus cash to acquire some good companies. We, in fact, looking for good M&As. That's what. And coming to the UPL point of view, there is no truth in that subject. We don't have any discussion with UPL, and we are next 12 months also, we don't want to discuss anything such type of things. But in fact, we are looking for good M&As.
Oh, so that's interesting. You're not looking to sell, you're actually looking to buy. And you're saying you have a 5,000 crore rupee cash pile. Anything
500 crores,
500
crores money we kept for
500 crore rupees. What size of companies, sir, are you looking at? Anything immediately on the radar? Again, some guidance to investors. What can we expect? Is it going to be a small size company?
Immediately, nothing is there, but we are looking for good R&D based companies which having good germplasm companies. Germplasm companies, because we have a top market lineup and everything.
Okay.
And we are looking for any good companies which are having good germplasm.
Okay, all right, Mr. Vijay Kumar. Thanks so much, sir, for stopping by and giving us all those details. But we need to focus on that big CNBC TV18 exclusive that's flashing for you on the screen. Now, GMR Infra is set to list its airport arm on the bourses. Now, sources suggest that the valuation expected is upwards of around 25,000 crores. Nisha Podar, she's breaking all those exclusive details to us, and she's with us in the studio. Nisha, over to you.
Thanks for that, Nigel. Yes, sources with direct knowledge share with us that GMR Infrastructure is all set to list its airport arm, GMR Airports. Now, remember, the biggest hurdle in this particular case has been cleared. That was the entire settlement and the dispute with the private equity players who had invested in GMR Airports way back in 2011. So, regarding their convertibles being converted into the equity of the company was a big stumbling block. So, that has been settled out of court now, and that settlement amount is also 4,800 crore rupees. Now, as per that settlement, GMR Airports is valued at 21,000 crore rupees. So, we have a benchmark in terms of the valuation of the subsidiary of GMR Infrastructure. When it goes for an IPO, they will be asking for a premium over the last round of that settlement done. So, therefore, sources with direct knowledge share with us that upwards of 25,000 crore rupees is the kind of overall valuation expectation. 25% dilution is what they are expecting, and a large part of that recovery and the fund raised would be used for debt repayment for GMR Infrastructure, which is sitting with a debt of 21,000 crore rupees. So the lenders will also be a happy lot. So a lot of internal restructuring will need to be done. What I do gather is that that's been put on the fast track, and the bankers are working towards it, and the filing could be also expected very soon. So the valuation that really came out of this particular settlement is something to be watched out very closely. They have notified to the exchanges about the settlement with the three private equity players like Macquarie, as well as GM Financial and Stanchart. And we do have the exact details of 4,800 crore rupees of settlement amount. Out of that, it's a debt of 2,000 crore rupees they'll be taking over, and cash as well as equity worth 1,400 crore rupees each.